Hello everyone, and happy new week to you all. And today I want to show you how you'll be trading your most probable setup. So there's this high probable setup that will guide you, even if you don't know what you can be considering taking trades into the market. This is one of the things or one of the criteria that we consider whenever we take the trades. So we have several criteria. Market always won't offer you the same thing like it does. So market will never offer you, like you, for instance, for those who are trading the support and resistance, or the trend lines or the chart patterns, we know price will sometimes will offer you the double bottom or triple bottom or the head and shoulder, whatever, or maybe the resistance has been broken, whatever. But we on our methodology, or in our methodology, we have some several criteria that we consider whenever we take the trade. And once you do your homeworks, you make use of everything that I have provided you from the beginning. This will be helpful on your side. It will be helpful, and it will guide you to take some trades easily, because you'll be minimizing some errors or the room of errors. So today I'm going to teach you how we can take the trades for our first criteria. So this is one of our criteria that we consider whenever we look up taking the trade. So the first thing is we need to understand what are the areas of liquidity. I think I uploaded the video about the validations and invalidations. So the area the area between validation and invalidation is now what we call the area of liquidity. So what are the liquidities? Liquidities are simply buy and sell orders. And where are they located? Inside the area of liquidity. So we expect some potential movement of the market whenever they reach these, what we call the areas of liquidity. Here's where we do expect some movements of the market. We expect the market to sell or eventually to buy. So the area of liquidity is simply the area between high and low, or the area between validation and invalidation. So this is the area that we should be considering making business. Or business, I mean, we buy or sell. We buy or sell if the market has provided us all the criteria that we needed, or the essential things that we require. So what should be done inside the area of liquidity? So we are trading two things normally. We do trade the continuation, and also we do trade the reversal. So this is what we do expect trading into the charts always, or into the market, either the continuation or the reversal. Continuation is simply proceeding to the direction that price has offered you from the beginning, while the reversal is simply changing the direction of the market from the previous trend. So if it was an uptrend, it becomes a downtrend. So if it was a downtrend, it becomes an uptrend. And that's what now we call the the reversal. While the continuation, if we are the downtrend, we know if price breaks the low of the downtrend, it validates the structure, it's a downtrend. Or whenever price breaks the high of an uptrend, it validates the structure that is an uptrend. That's sorry, let me pause a little bit here. So I was talking that we mark these validations, point and the invalidation for continuations and the reversal. So they help us into if we do want to consider where the trend is going. So if now we have the price that is doing some continuation, it has validated the structure. And also if we have the price that has done the reversal and offered you the structure, which is, we say, is an inside formation. I didn't remember if I had provided these the formations, the outside formations and the inside formations. So in this case, we do expect price entering this area of liquidity, then proceeds to the direction down, and we do expect price here entering this area so that we can be grabbing our trades into the direction that is supposed to go, which is downtrend. So after now, what should be considered? What is the great confirmation that will guide you? This area is a favorable area for you to take a trade. So the best thing that you have to do is to wait until the price enters here in your area of liquidity, then shifts and give you a formation. So this formation is the one that will be used for you to enter the trade, then to take your your pips to the downside. But we have to link these with time frame. For instance, now we have marked this area of liquidity as our daily time frame. For instance, this area of liquidity is our daily time frame. Daily time frame. We need to wait for the market until it comes here in 1 hour and provides you a shift and area of liquidity. Yeah, the inside formation. Then inside that formation, in 15 minutes, we'll look for the engineer liquidity or failed engineer liquidity for us to take the entries. So this is the best setup that you will ever find in the market. The best confirmation, the best setup that we ever find, because this is our area of liquidity already, and the good confirmation is that price has shifted inside the area of liquidity and provided you the formations. So it's either inside formation or the outside formation. So it depends on how the price would offer you. Same applies if you had your trend. Let's say this is weekly, and price has shifted and offered you the formation. So into this weekly formation, that we have marked, we go 4 hours, we wait until the price comes inside here of this area of liquidity in 4 hours and makes a shift. After offering your shift into that shift and formation of 4 hours, we do mark the area of liquidity or the formation that was provided us and go in 30 seconds, 30 minutes to look for the either engineer liquidity or the failed engineer liquidity. And this will be the best setup to be taken on your side, because price has already shifted first time and gave us the formation, and inside that formation of 4 hour, price shifted again and gave us the formation that will be considered to be taken as the engineer liquidity or the failed. So this is how you can master. Once you backtest a lot, you'll be getting a lot of a lot of setups, and this is one of the most probable setup that I'm talking about. So is either you have your monthly, then wait into your daily time frame until price comes here, shifts, gives you the formation, then inside that formation you'll be taking your trade in 1 hour, and that's it. So that's it. Without wasting our time, without wasting our time, let us proceed with some few examples. So we'll be checking in the continuations as well as the reversals. So this is our AUD USD. As you can see, we had the reversal around this point. Price gave us the inside formation. Price came to take the formation from this structure, and also price shifted and gave us another formation. This was the formation that was offered by the price. This was the formation that was offered on our side by the price. So what must be done is to wait until price publish the candlesticks from here inside and shifts, also provide us what we call the formation. And yeah, so we wait until at this time we've already marked our area of liquidity. We won't be considering this side anymore. So we'll wait until price comes inside here and provides us a shift and the formation. So the shift and the formation are the ones that will be considered to be taking our entries where it's supposed to be going by the price. So we see that price, okay, from this structure here, we see price has already shifted from above here. let me clear all the drawings. So we have the shift, and we had the first formation, the second formation, the third formation. Eventual price will have to come to the third formation here that was created by the price. Inside this formation, we'll be looking at the inside this formation, we will go in 30 minutes, and I think I didn't talk here much about the time frame combinations. So I think I'll provide the video. In 30 minutes, we look for the engineer liquidity or the failed engineer liquidity we can't find. If we can't find, we go back to 5 minutes on the same structure. So on the same structure, we find that the engineer liquidity is at this point. So this becomes our entry. And we will be looking at the risk appetite. Depends on how, but the stop loss is supposed to be at this point. This is a point where it's supposed to be your stop loss. So you depends on with your risk appetite. If you'll be able to handle this stop loss of 1.2 pips, 1.5 pips, yeah. But on my side, this is a small amount of pips. So at least maybe 10 pips. But let us just put the stop loss at this furthermost deviation here, the other one, this one, and not this one that provided us the engineer liquidity. So this one is the one that will be considered as our entry. This one, sorry, this is our entry. And this one is our exit, as our stop loss. We go back to 4 hour, we can go back even to sorry, we can go back even to we can even go back, sorry, we can even go back to weekly so that we can be getting our areas to exit. So the areas that will be considered to exit, the first one is the one that has initiated the structure of coming to grab this engineer liquidity. So this will be the areas that will be taking our trades if price tries to close above. So if it doesn't close above, then there's no need for us to be holding the trade. So we'll be waiting. So the areas that will be taking the trades, this one, we take a profit at this point. We take a profit at this point if price closes above. So let us with these tools. Our stop loss is 4 pips, and our target 100. So if also price manages to close above here, of which now we'll be considering these levels, the other levels here, and if they close above, we keep holding the price, since it's a reversal from the weekly time frame. So if it's the weekly time frame, we hold until we can't hold anymore. So that becomes our entry point, and our exit points are TP1, TP2, TP3, TP4, and so on and so forth. This one. So let us see. So as you can see, price eventually came and grabbed the entry, then went to the upside direction. But we consider also price closed above. We wait until this point. If the price manages to close above, not this one, sorry. As we know, price when it closes above this, we can't fear any movement of price coming to the down below. So we keep holding. So there's no need for you to fear what's happening with the price. Eventually, price came to grab the liquidity from this structure, then proceeded to the upside direction. So, and as you can see, price managed to close above even from this structure. We can go back to weekly. So to our weekly time frame, our next target will be this structure above here. So this is where we can keep holding the structure until this point. This is our weekly level. I remember I provided the video on how you can be holding the trades for a long period of time. So until now, price is at this point, and it has already validated this the structure that was considered to be the area that came to grab the liquidity from the outside. that's it. So that's the first example. Let us see the other example. I think it's USD card also for continuation. That one was the reversal, so we had the USD card for continuation. I think it was something like daily, if not mistaken. Let me check. If not USD card, it was GBP USD. Of course, GBP USD has a lot of opportunities based on these structures. GBP USD, yeah, GBP USD from this structure here. Remember, this is our daily time frame. So from our daily perspective, price validated the structure. We consider this as our continuation trade. We go back to 1 hour to look for what price has been offering us around this area after coming inside. So when price would have to come here inside, we'll have to provide us a shift and the formation, whatever the formation, inside formation or outside formation. That will be our best criteria to be considered in 1 hour. So wait here. This is our shift that was offered by the price. So this is our shift. This point was our shift, and price offered us the inside formation. So into this inside formation, we go back to 15 minutes. We mark, we find either do we find an engineer liquidity or failed engineer liquidity. So we can't find any engineer liquidity or failed. We can go back to 5 minutes or 3 minutes. For instance, this is our, let us go to 5 minutes. So once we go to 5 minutes, we see our engineer liquidity is at this point. This is our engineer liquidity. And let us check if we can manage to grab this amount of pips. It's only the stop loss is only 4 point, sorry, from this. Three pips. So you see, I came from daily, but the entry was taken at the entry was taken at 3 pips is our stop loss. So what are the best areas to consider is your take profits? We'll see, but first we have to put these predictions to 3.7 pips, but I'll eventually use even up to 10 pips just to give room for the price in order for it to breathe a little bit. Sometimes, you know, having these tight stop losses, you'll end up sometimes losing in the market. So the first take profit was to be this one. This was to be your first take profit, and price managed to close above. The second here, the top. So this is the first, while this one is the second. The above one is the second take profit to be considered. We do consider after price closing above these highs, the turning points. So as you see, price came and grabbed our entry, then proceeded to the upside direction. So this is one of the trades that I took. I managed to take. Also, I think we have the AUDUSD. Also, I managed to take this trade on the AUDUSD. Yeah, this trade, and it's still. Did I just explain about the AUDUSD? Was it AUDUSD? Yeah, so so yeah, it was AUDUSD. I think I was just talking about the AUDUSD. Yeah, so there's no need for us to explain. Yeah, this trade is just is one of the trades that I'm holding at the moment, and we have gold that I'm holding as well. So I'm explaining the things that I took the trades of, and not anything that I decided to take. So for instance, here we have this is our gold trade. This is our gold trade. We see price validated the structure from this point on our daily. Or we can mark here. but you will find gold have some differences. Just mark this point as your validation point. It will be very much greater. We had the formations, we had the shift, in fact, from inside, and we had the formation. In fact, price shifted at this point because it came to grab the liquidity inside this area of liquidity. So after grabbing, shifted and gave you the formation. So we had the first one and the second one. Obvious price, we look anywhere that price will have to offer us the shifted formation into 1 hour. So we mark this as our formation. This is our formation. We wait until the price comes here inside this formation and provides us a shift into 1 hour. So that's the thing that you need to consider, because this is our daily. So we go back into 1 hour. Price shifted here in our 1 hour. This is our shift. And this one is our inside formation, and the rest of the formation. Obvious price will have to follow the formation that hasn't consumed at all. So inside this formation, we'll be looking at engineer liquidity or failed engineer liquidity. We go into 15 minutes time frame. Whenever we come here, we see that this is our failed engineer liquidity. So I'm explaining something that I took because, yeah, this is our engineer liquidity. And where do we keep our stop loss? At least this point will be a good point for us to keep our stop losses. So this is our entry. And where do we exit? We do exit where the areas price has been approaching the market from the upper structure, sorry. So the points that we do exit, we exit the areas that, so you see price. So where do we keep our first target? Because I used this as our daily. So price came here, tapped. The first one didn't manage to tap, as you can see. The first one didn't manage to tap, but the second one, price eventually tapped this area. And where do we put our take profits? Our take profit, our first one, we do put at this point. This is because whenever we go to our 1 hour, we'll find a lot of structures to be considered as our take profits. A lot of structures. We have these structure here, we have these ones, we have these, all the structures will be there. So in order to minimize sometimes this room of errors, just mark the higher time frame structures. So is whenever the price closes above, you keep holding. So we had this one as the first take profit, as our entry was down below here. So that was our first take profit. We can still minimize the risk of entering with 38 pips. We can still minimize. So I'll show you how I did minimize this amount of pips and took the trade with a little amount. So so these are the targets that you need to consider, because we saw that price validated the structure from daily. So this is the continuation. If it's the continuation, we expect further breaks in the price. So if price closes above, we keep holding. If price closes above, keep holding. So it closed above from this structure. Price closed above from this structure, we keep holding. Closed above from this structure, keep holding. Close above from this structure, we keep holding. So no matter what will happen to the price, even if we have some little pullbacks to the downside, there's nothing that can stop us from holding this structure until this point, the further point here. But how did I minimize the risk of me entering this trade? I waited for the market again into smaller time frames. Let me show you. It was 3 minutes time frame, because the structures, the higher time frames, yeah, are the stronger time frames, but the smaller time frames are the ones that the structures are created earlier than the higher time frames. So again, after price hitting our level, it shifted. We had the shift. and the formation at the same time. So shift at the formation, but this structure was already liquidated. We had left with this only structure that was the formation, the inside formation. So we had two formation, but the first one was already liquidated. We had the second one. So into this second one, we look for engineered liquidity or failed. We find this is our engineered liquidity that was published by the price. And once we do measure here the amount of pips, we see that is only 7 pips of gold. So imagine entering with gold with only 7 pips. And this is what happened for the price to come and grab this point, then proceeds. Sorry. So this is how I managed to reduce the amount of risk entering in higher time frames and took the trades on the lower time frames, the 3-minute time frame. And yeah, this was the trade that I managed to keep holding until this time. As you can see, price came here to tap the area or the engineered liquidity, then proceeds to the upside. So, and that's it for gold. Let us see the other more examples. I think we have again on the GBP USD, one of the trades that happened a long way back. So I see on GBP USD we still have some more movement to the upside direction. So this was monthly time frames. This was the monthly time frame. We had our shift at this point. We had our shift at this point, this down point, and we had our formation, the inside formation. That price already grabbed it, so there's no need for us to consider the outside formation. But we have the inside formation. No, we had the inside and the outside. So we had the outside. We go to daily. We wait until the market comes inside this area and shifts this our area of liquidity. Remember, this is daily and we came from monthly. And if you want to hold the trades for a long period of time, use bigger time frames, bigger pictures for you to check your trades. Yeah. So eventually price managed to shift at this point and gave us the formation at this point. This is our inside formation, the only formation from inside. Price will eventually come and grab this, but inside this formation, we look on 1 hour for engineer liquidity or failed. We find that we have this as our engineer liquidity. That was our engineer liquidity. Let us see if we can manage the risk. It says 21 pips, but these they can be minimized as well. Is it 24? Sorry. Let me check. I didn't put, sometimes you have to be careful whenever you measure. 18 pips. So on my side, 18 pips, they can be handled well. So this becomes my entry point. My exit point will be around the area. So the last point maybe for the price until, because remember that was monthly time frame. So we do expect some more movement to the downside. So this becomes my last target. Whenever price closes below, then I'll keep holding the trade until further notice. Maybe until the monthly time frames there. So I'm marking this point as my entry and exit. So my last target maybe will be at this point. But price, if closes below, then I'll keep holding the trade. Let us play and wait for price. So price came to tap, and again it tapped multiple times, dropped to the side. So after dropping, we still have some more movement to be held. So we go back maybe to to the monthly time frames. This becomes again your target. You do some extensions here, you wait until the price drops to the downside. And what if closes above or below again? The next target becomes this point, and this is how you can be holding your trades for a long period of time. For a long period of time. You see? So let me provide some more examples. I mean, I guess 2 examples, then I will see. So that's it. Let's see. I think you had something on silver. Let's entry. We got something on silver here. This is 4-hour silver, and we see this is our area of liquidity, but inside this area of liquidity, silver shifted. Inside this area of liquidity, silver shift. This is 4-hour area of liquidity, but we need to wait. In fact, I didn't wait. It's just an example. Silver shifted from this area of liquidity. It had a shift. So remember, you can't just trade any kind of shift. Just wait the shift that has been performed inside the area of liquidity. So this was our shift, and price offered us the formation. So we had the first one, we had the second one. Eventually price won't leave this one to go to the other one that was left behind. So this is our area of liquidity. We go back to 15 minutes. No, 5 minutes, because we came from 30. We look for the engineered liquidity or failed engineered liquidity. We find this is our failed engineered liquidity, and our stop loss will be kept down below here because, you know, the candles that break the overthrow are the ones that to be considered. So this is our entry point. Where do we put our exit points? At the points like these. This is the point that we do put our exit point. So easy once you master this. And the one, if price closes above, this one would be your next target. So price came, tapped, didn't close above here, but I think it came to grab the liquidity from the below, but eventually managed to close above, tapping this point here, the other one. So for this case, again, it didn't close above, eventually managed to close above. The other targets were these points. These points were the other targets. So we had the 3 targets to be considered, and here price closed above, of which now price will have to come to grab the liquidity from below. Then until this point here will be the next level to be considered as taking your profits. So that's how this entry was to be grabbed. And the last one is all about, I think, USD. Yeah, we have a lot of examples, a lot. If I could have time, then I could provide you more examples, but eventually, let us look for the last one. That I think one of my students, we did this example and it was not too way far. If he had to be considered be taking the trade, then it's okay for him, but I think he didn't take the trade. So we had a shift here and we had the formation. So inside this formation, we need to see in 1 hour if price has offered us what we call the shift and another formation. eventually you can see the shift and you can see the formation at this point. We go back to 15 minutes inside this point to look for the engineer liquidity. We find this is our engineer liquidity. This is our engineer liquidity. There's nothing else you can do to do not consider this as engineer liquidity, because it's just clear and there's nothing else here. Yeah, we can go to, as I said, the highs, the turning points. These are the ones that you consider as your TP1, TP2, TP3, and so on and so forth. You can even go back to daily, and this would be maybe last point, but you can still consider if price closes high, depending on the direction of the market. So the easy thing is that if you want to be taking your trades intraday, you'll be considering the smaller time frames, like 1 hour, to take these partials. But the bigger time frames are the ones that you took the trade, but the smaller time frames are the ones that you take the partials of the trades. So I hope this will be helpful to each and everyone whosoever takes the trades. I mean, reads well about the structures. But this is one of the best thing that you should consider whenever taking. So price closed above here, so expect price to move furthermore here, so that it can be. So as I said, do not worry about the structures that are moving in a different direction from your side, because once you consider the price closing above a certain structure, it's one confirmation. Of course, we have like 5 criteria to be considered whenever taking the trade. You can't just consider any kind of trade. I mean, you can't just consider, I mean, most of the time price won't offer you. We have the liquidity consumption, which is 100% best, but most of the time it's also aggressive. But the liquidity consumption is something else. And I think each trader or every trader needs to understand about the liquidity consumption. So I think for today, for I've done my best putting these, and they will be helpful on your side. And yeah, and that's how you get to minimize your risks by entering the market with small amount of pips. You see, most of us we tremble as price comes back into this area, because yeah. But whenever you have your confirmations configured, so there's no need for you to worry about the movement that approaches the area of, approaches your entry. So there's no need for you to worry. And this is how the trade was supposed to be taken. So the next target here is this one. And price closed above, so we are waiting for this target next. Thank you, and enjoy the video and have a good trading week, everyone. Thank you.